Okay, so normally I'll be coming to you all live with access to my actual phone, so I can actually be the producer for these. So today, Leon and I have experienced some technical difficulties, and we are still coming to you live from Invest in Education Academy to talk to you all about three stocks to watch and why. But today, you will notice we're a couple minutes late. We apologize. And for those of you all listening to the podcast, you're probably listening to this later on, so it doesn't matter. But just understand that we're experiencing a little bit of technical difficulty. So bear with us for this particular live today, because it's going to be a good one. So Leon, you can tell them why we chose this topic, and I'll do some housekeeping.
Yeah. So reason chose this. Okay, the slide just went down.
Yes, it's cool.
Okay, cool. All right. So the reason I chose this topic was that so this is earnings week, right? It's a huge, big earnings week, and when companies report their earnings. And one of the biggest questions in the stock game everyone gets is, who should I buy? Who should I look at? Why? People ask Brent and I all the time, what are you guys buying? What are you guys looking at? Well, between today and yesterday, three of the biggest companies on the planet reported earnings. That was Apple, Facebook, and Google. And the question we always often get is like, if you're buying a company, why? Well, today we're going to tell you why these three companies, if you don't own them, right, or if you do own them, if it was me, of course, everyone's different, but if it was me, I would buy more shares in these three companies. If you do not own either of these companies, you may want to take a seriously hard look at all three of these, and potentially, if it fits your suitability, potentially buying shares. And we're going to go into why that is in a minute. So Brent, when you get a chance, you throw slide one.
Yep.
I know you're over there doing all types of
yeah. I'm keeping it together right now. But this is cool. This is business, and things sometimes work, sometimes they don't. But for everybody who is watching, this is a great time to share this content. We're not going to be able to share it the way we normally would today. So for the friends and family that you think should be in the market, and you would like to share this information with them, it's a great time to do so. And we just want to also thank everybody. Know that we do have the IEA Crypto Bulls coming up like next week. We are this close to having everything complete and going and launching. And I got to tell you, the mastermind is already popping. Like, the mastermind already is providing amazing information about free cryptos, ways to go get tutorials, what accounts to set up, tracking mechanism, taxes. It's a lot going on inside the mastermind already. So our tap out is going to be between 20 and 30 members for the first cohort. As it stands today, we have 8 people in the mastermind already, and we have about 6 additional on our wait list. And we already have structured the website when it launches to have a wait list for the second cohort. When we launch, it's going to be $200 per month for access to this group. And once this first cohort closes, the price will go up by at least $100 a month. So that next cohort, if you're waiting, there will be a late fee for waiting. That cohort will be at least $300 a month for cohort number 2. And there's a possibility cohort number 2 might be $400 a month. And some people have asked us, why are we making this platform so much more aggressive, if you will, than the traditional Investing Education Academy platform? Because cryptocurrency is so much more aggressive. The speed at which it's growing, the opportunities abound, and billionaires are being made. And we still love the market because there's going to be some direct residual effects in the stock market, that are going to be amazing opportunities for our Investing Education Academy community. But cryptocurrency is not going to wait for you. The opportunities will not wait for you. And in this particular situation with IEA Crypto Bulls, we're not waiting either. You want to get in or you don't. And we hope you get in. So if you are interested, I'm telling you right now, you want to send a direct message to myself or Leon. If you're listening to the podcast, you want to go find Brent Simpson, or go to investingeducationacademy.com and send us a direct message through the contact sheet. Or if you're already an IEA member, which many members are switching over to have both platforms, because with the IEA Crypto Bulls, it's also going to come with a community level IEA membership. So again, if you become an IEA crypto bull, it will come with the IEA stock portfolio and other investments, because not just stocks, community membership. So you will get both with that. All right. So that being said, let me make sure I can do a screen share. Did I miss anything, Leon?
Nah. And so just to kind of go piggyback on what Brent said, a stat for everyone, right? And this blew my mind. So I have traditional, I guess we call it traditional now, but I have traditional crypto, which is Ethereum and Bitcoin in one account. And then I have an altcoin account, which is really where a lot of the action is now in crypto, is in these smaller coins. They can grow a lot faster. And so I started buying altcoins in February. My account is up 50%, 51% as of today in 2 months, 51%. And this is why we're saying, like, we can't really be like, things are moving so fast. Like we're all about education. We're all about teaching. We're all about handholding, because that's what the community needs. Like, that's what a lot of people need. And that's what Brent and I want to provide. But you can't really do that in crypto, because if you kind of wait around, you're going to miss out. Like, had I not jumped in February, I would have missed out on 50% return in 2 months. So then, like Brent said, that's why we're kind of keeping this thing going, because it's not going to wait for us, right? It's either we're in or we're out. So that's just a little anecdote for y'all, as far as crypto bulls.
I got to give a story, Lee. Let me give a story.
Okay.
So we have a colleague out in New York, and he's Russian, and he was heading to Colombia for a mastermind. Long story short, he ran into one of his fellow masterminders in the airport, who also was on their way to this conference. They started talking about crypto. The suggestion was made of a particular cryptocurrency, one that I'll be sharing tonight in our mastermind group. And he put $2,000 into this cryptocurrency before they got on the plane. It was the suggestion. He was like, okay, I'll put 2,000 and see what happens. By the time they landed in Colombia, his account was now at $16,752. Like that's insane. And he sold. Like he said, as soon as he landed, he just sold it. And so, you could have said, ride it to the moon. But, having a strategy, not being greedy, is the reason why we're creating a mastermind, because there's so much information that's happening at the micro level. And I mean this, at the micro level, that once it's hitting the general population, it's not old, but it's not new. And so it turns out that there are a lot of people who actually are creating these cryptos. And when you meet these, or you are aware of these ecosystems before they even launch, you're getting in at like 0.000001 of a cent. And that means if it just makes it to 1 penny, you've like had 1,000% rate of return. So, I hope you join. I understand if you don't, it's not for everybody. But it's about to be some serious money to be made in this marketplace. And if anybody knows Leon and I's reputation, we're going to do our best to make sure we provide great information. But we're also doing it as a mastermind style, because we don't know everything about crypto in the room. And there are a lot of people out there who know like some amazing content. So the more people we get, actually, the better off it is. But we're keeping it focused, and we're keeping it not to become so noisy. Like, you can go to Discord, you can go to Clubhouse, but you're waiting 5 hours to get on stage to ask a question. Or when you do ask, they mute you and it sends you back into the audience. This is not that. That's why we're capping it at 30, because we want the people in this group to go buy houses together in islands later on, like remembering when we got started in a crypto bulls. And that's not too far of off of a thought, because even Leon has friends who bought land in Puerto Rico and other places from what they've done in cryptocurrency.
Yep. Okay, so that was our quick anecdote on crypto. So back to the stock market now, our number one seed. So reason we chose this topic was because this is the number one question. What are y'all buying, and particularly why are you buying it? Or what are we looking at and why we're looking at it, not necessarily buying it. So here are three, and these might seem obvious, like, okay, it's Apple, Facebook, and Google, right? But then it's like, the question is, okay, but why? Like, why are they good investments? Why would you recommend them? Why? right? Because again, our biggest thing in IA is do your research, right? Do your research. And I'm all about like we said with crypto, buying the smaller coins is where a lot of the action is right now. But when you see these type and this type of data, you don't actually get from coins because there are no earnings, there are no revenue with coins. When you get this type of data and research from companies in the stock market, and particularly big companies, I don't care what size they are. These are just ridiculously off the charts fundamentals that these companies have. These three companies have. Like I said, it may seem obvious, but for me, this is the reason why if I already own it, I would add more to my position. So Apple reported. I think Apple and Facebook reported today, and Google reported yesterday. But let's just go through these numbers real quick. So for Apple, the Wall Street estimates for profits. For profits for Apple was $16.6 billion. Right? They actually reported $23.5 billion in the first 3 months. This is quarterly earnings. In 3 months, they reported $23.5 billion, a 41% beat. They beat Wall Street estimates by 41%. Now I'm going to give you a point of comparison. A beat on Wall Street, if it's anywhere from 5, 10, maybe even 20%, is considered just awesome. A 41% beat on profits is highly rare. And think about it. This is a company that has revenue pushing $90 billion. This is a massive, massive company. And for them to be able to be beat on profits by 41% is just ridiculous. So that's the first on profits. Now, revenue. Wall Street estimated $77.3 billion in revenue. They actually returned $89.5 billion in revenue. And that $89.5 billion was 54% more than they reported the same quarter last year. 54% bigger. Like, I mean, this is a $1 trillion company, and they're growing.
Still
revenue
showing as a growth company.
Yeah, I mean, they're showing growth is like 20%. They're double it. Yeah, they're double that. So they grew revenue 54% over the same quarter 1 year ago. Again, unheard of for a company this size. So that's Apple. Facebook. Their Wall Street estimates on profits was $16.7 billion, was what Wall Street expected. They actually came in and reported profits of $9.3 billion. Again, a 39% beat. Yeah, companies, these companies of this, like you expect these type of beats on companies that are startups or maybe mid cap companies, maybe 300-400, maybe anywhere from $5 to $10 billion in market cap. These companies are pushing $1 trillion in market cap. I mean, and they have revenues of 10, like Facebook has revenue of $26 billion in a quarter, and they're still growing their profits by these numbers. So Facebook will probably,
I can hear your excitement.
dude, when I saw these numbers, I was like, what the heck? I was like, how in the world are companies this size growing their profits this much? So anyways, yeah.
So real quick, and so for anybody who's really trying to get it, this is one of the biggest companies in the world. Like
Apple is, I think it's either Apple and Microsoft is the biggest on the planet at pushing $2 trillion in market cap.
Companies like this, if they can get to 3% increase,
right,
like that's still amazing. You're talking about 41%. Like this is global takeover. So like you really need to understand what's happening when we say these numbers. And again, just for anybody who's watching this isn't necessarily our endorsement. You still have to do your research. You still have to look to see if it makes sense for your portfolio. These companies are not bulletproof. Tomorrow the floor can fall out from any of them. Highly unlikely, but we have to say that, right? So just as we go through this and as you absorb Leon's excitement, just understand you have to do your research. And we own all these companies, just full disclaimer as well.
Right. Yep. I will be adding, actually I've started adding to my positions. So again, Facebook beat on profits by 39%. Again, massive. On revenue, they were expected to generate $23.6 billion in revenue, Wall Street estimate. They came in at $26.1 billion, a 10% beat. That's more in line what you would expect to see from a company this size. Actually less than that. That's actually high.
No, you wouldn't see 10%.
Yeah, that's actually high for a company the size of Facebook. So that's
you're still looking at about 5 to I say 7.
Yeah, anywhere that 3 to 7 range. Yeah, but they beat by 10% on revenue and 39% on profits. Massive. And then Google, the last one, Google. I mean, look at this. Like Google was expected to earn $10.6 billion in profits. They came in at $17.7 billion, a 70% beat. Again, companies of this size do not do this. These are extraordinary numbers that these companies are reporting. A 70% beat on profits. Revenue, they were expecting 51.7 by Wall Street. They came in at 55.3, an 8% beat. That's kind of more in line. It's still a little high for companies of this size, but that's more in line with what you're used to seeing. But I want to just take a step back real quick. And for people watching this or people listening to the podcast, so again, revenue is one thing. Profits is what we pay for, right? That's why we buy a stock for their profits. All three of these companies grew their profits no more than 39% in a quarter.
No less. No less.
Sorry, no less than 39% in a quarter. 39%, like the numbers that they're bringing as far as that are hitting the bottom line, their profits growing no less than 39%, as we said before. And as I say this all the time, growth companies are typically defined by growing profits about 20, 25%, either quarterly or yearly. These companies are doing double and almost triple that. And these companies are the largest on the planet. So if anyone's looking for anything to watch and or maybe buy if it fits your suitability, these are three that in my mind have got to be on your list because these numbers are extraordinary. They're growing at rates that startups typically do. You get to the largest companies on the planet Earth, some of them pushing $2 trillion in market cap. So if anyone's looking for anything to watch and or maybe buy, these three have got to be on your list.
Yep. So, I mean, for everybody watching, definitely do your due diligence. And when you look at these FANG stocks, I mean, this is one of those moments where you're going to wish you probably you would have increased your position. If you have a strong positions in any of these companies, I've owned Google since it IPO'd. It was a Dutch offering. I never forget. I was so excited they were doing a Dutch offering. And then for Facebook, did they do a direct listing?
No, Facebook was a traditional IPO. Yeah.
So I've owned Facebook since the IPO as well. Can't say that about Apple. I wasn't there for that. Yeah. But
that was like in the 80s.
Yeah. So when you're looking at these numbers, many of these companies have come into existence during our lifetime. And you look at Apple, who maybe came into our existence for some of us during our lifetime, some of us after. Some of us were there for that IPO as well, who listened to our podcast. What are you doing to invest for your children with like investments like these? And we say this again, time and time again, fractional shares are the new stock split. So if you can get fractional shares, what are you doing for your kids? Because what happens when they are our age and they're talking to their friends? Are they going to say, oh yeah, my parents bought me Apple, in 2021? Or are they going to be talking about, I really wish I can get to the stock market. I just don't understand it because we never educated them or we never gave them opportunity to be invested today, or, hopefully yesterday you start investing for them. But if you haven't, at least have the conversation, like listen to this podcast with them, talk to them about what the stock market is, why you got in, why you haven't gotten in. I mean, don't just share your successes with your kids, share some of your failures. Last week, Leon and I talked about some of the stocks that we've chosen that crashed and burnt. Well, no, I can't say that. They're down right now.
They're down. Yeah, they're down.
And so
I think they were all down no less than 30%.
Yeah, but I mean, the point is really like we didn't just, and that was because one of you all, like one of the people listening to our podcast and watching our live called and said, why don't you talk about the ones that aren't doing so well? So we did it. Talk to your kids about what you didn't do so well so they can fill in those gaps. Not just about, let me show them I'm the hero and show them all the wins. The reason I'm saying this right now, these stocks, when they release their earnings, they're going to change the environment for the stock market for a short period of time. And when stocks like this beat earnings this much, the attention becomes, well, it already is global, but the investors, they understand that this probably isn't just going to stop. Like, next year, they're not just going to be negative 100. It's like, no, they're probably going to have a good couple years, because when you have revenue like this, you can hire the best. When you have revenue like this, you can do research and development. When you have revenue like this, people want to partner with you. When you have revenue like this, you can acquire your competition.
Here's another big point about Facebook and Google. So coming out of the pandemic, so during the pandemic, they got hit hard. They got hit, at least their numbers got hit hard. Their businesses did, because they're mainly based on advertising, online advertising. So what happened is, these numbers are from the first quarter of this year. So the first quarter of this year is now, we're kind of coming out of COVID, things are starting to open back up, and companies are starting to advertise again. So these numbers are based on kind of the economy opening back up. The economy is nowhere near open back up, right? This is just from the first 3 months of this year. So imagine in the next, and again, Google beat profit estimates by 70%. So imagine come summertime, fall, winter, and into next year when things are really opening back up, the type of revenue and profit growth these companies are going to see, because every business is going to be open back up. I mean, right now, cruise lines aren't even open. Many restaurants are at certain capacity. A lot of the hospitality industry, people don't feel comfortable, traveling or going to hotels. So some of that ad spending is still down. So it's very early days on us coming out of COVID, and they're already seeing this type of profit growth. So the next year and a half, 2 years as we come out of COVID, I mean, I can only imagine what Facebook and Google are going to look like, at least on the ad spend side.
Yep. And so we will not be going to Clubhouse today after this one. I know some of you all are looking for us over there. Today we won't be going on that platform, just because we have a lot of work to do on the back end to get ready for the IEA Crypto Bulls. So most of our effort is going into building out the Crypto Bulls platform so we can launch next week. So again, if that is something you're interested in, I would suggest not waiting. The mastermind is already doing amazing. So with that being said, we owe you 2 stock picks, right? So I will go first, and my pick is Louis Vuitton. And so for many of you all don't know, Louis Vuitton is, ironically enough, trades over the counter, or it's called the OTC market. And additionally, some people might not know, but it's what's considered an ADR. That's an American Depository Receipt. That's a foreign stock that trades as a US based stock, although it is a foreign investment. So you won't really recognize any difference when you buy it like anything else, but we want to make sure you're as informed as possible. Which piece is very interesting is it trades under ticker symbol LVMUY. Again, for anybody listening, it's LVMUY. It closed out yesterday at $153 per share, or today, as of close of business today, $153.61. They have a market cap. Now listen to this. Their market cap is $386 billion. That's huge. I didn't know they had a market. Leon, did you know that the market cap was that big?
Nah, and having a market cap that big, I don't know why they're trading OTC.
I have no idea why they're trading OTC.
Yeah, that's strange. Yeah.
But so for anybody who's interested, I didn't know all the brands that were included inside this platform, and I am not going to go through all of them. But you're talking about Fendi, Louis Vuitton, of course. They have Moet. I can't even say half these names. Charles Leblanc. Like, I don't know if I'm saying that right. Christian Dior. Some of the biggest brands that you can imagine are inside the Louis Vuitton business model. And let me tell you why that's important. And I didn't know that they control Hennessy either. I didn't know Louis Vuitton controlled Hennessy. That was a shock. But the part is why I feel like this is a very important company to get into. As Bitcoin and these cryptocurrency billionaires are made, and notice I skipped over millionaires. I'm telling you, at some point, millionaires aren't going to be impressive anymore. Like, for somebody to say they're a millionaire, it's going to be like somebody saying they make like $250,000, or they're like somebody that makes $150,000 a year. Is if you're not heading towards being a millionaire, you really got to reflect on what you're doing, because very soon, I don't think it's going to be far off, being a millionaire is not going to be impressive. But with that being said, people who are in this cryptocurrency marketplace, some of them have never experienced this kind of wealth or this level of riches, because I don't think many of them are going to make it to wealth because they're going to do something foolish. But they're spending money, and they're going to spend money on luxury goods. So when you look at luxury goods, Louis V is directly in alignment with where they're going to go spend money. And they have a plethora of champagnes and alcohols that they use, and people are going to celebrate their success. They're going to want to go out. They're going to want to buy drinks. They're going to want to do everything that they're representing. People are going to bathe themselves in just because some of them, they never had the ability to do it before. Others don't know any better. And then some legitimately want it and they're going to start flipping their goods. And if you are an IEA Panther, you will understand what we're talking about when we say flipping a luxury item, because we have learned quite a bit about flipping luxury items. They have given us a new perspective on luxury goods. So, Louis V, I think, is supremely placed to reap the benefits of this cryptocurrency boom by providing luxury goods that most people have always wanted.
And also think about coming out of COVID, right? Like people are looking to celebrate freedom, getting out the house, partying, going to shop, going to buy. And Louis V, for the ones that can afford it. I mean, they do have high end items, but not everything they have is high end. Yeah. And also, like you said, they own Hennessy. So, people gonna be popping them Hennessy bottles once they get up out of COVID, get up out the house. I know a lot of people popping them in the house too. So
right.
So all right, my pick is a company named PaySafe. Ticker symbol is PSFE. So PaySafe is interesting, right? So they're essentially the Square and or PayPal of the UK. Very, very interesting company. They actually came public via a SPAC. So, SPACs have been, decimated the last 2 months. And they were hit hard too. I think they got up to as high as 18 and now they're down to 13, which I was drooling at when I saw it. So just to tell you a little bit about PaySafe. So I'm just going to read a little bit. So PaySafe holds the number 2 market share position in global digital wallet market. The company's digital wallet is in over 120 markets and has customers like DraftKings and William Hill. The company has 3.8 million active users of its digital wallet. PaySafe is also the number one. PaySafe is the number 1 in the iGaming eCash network segment. Customers for this segment include Fortnite, Twitch, Spotify Technologies. The company sees more wins in iGaming as more states legalize gambling. PaySafe also has Roblox and YouTube as customers. In the independent merchant market, PaySafe holds the number 4 market share position and helps with POS, point of sales, and e-commerce. So here's some of the numbers now. The company's estimated revenue for 2021 is $1.5 billion. And PaySafe said revenue will grow at a compounded annual rate of 11% from 2020 to 2023. So they're killing, essentially. Couldn't find any current profit numbers on them, but back in 2016, they had a net profit of $142 million. So they do have a history of being profitable. And if anyone wants to find out their most recent earnings, their earnings release is actually on May 11th of next month. So that's my pick. PaySafe, again, they're kind of like the Square, PayPal of the UK. They're moving into the US now, and they're huge. As I just said, they're huge in gaming, which, as we know, is a growing field. So PaySafe right now they're trading, I think, like $13, down from 18. And so I've been adding. I think I bought around like 15, and now I'm adding. Now they're down at 13. I'm adding more now.
So for everybody watching, the picks today were PaySafe, ticker symbol PSFE, PaySafe Limited, trading roughly $13.79. And the other pick was Louis Vuitton, and Louis Vuitton's ticker symbol is LVMUY. And just one public service announcement for all of you all who watch this: be very careful if you're trading in Robinhood right now. And let me tell you what I mean when I say careful. In the cryptocurrency market space, cryptos go by abbreviations. So do stocks. Some of the abbreviations are exactly the same. So if you're in Robinhood, especially because they do crypto and stock, you might put in a symbol and it pulls up a cryptocurrency and you don't even realize it pulled up a crypto and you think it's maybe a stock. For instance, VeChain. VeChain is a cryptocurrency and the symbol is V. Visa symbol is V. And so if you were just to do a search for V, pay close attention to what comes up in the search bar. And I don't know what other platforms that trade stocks and cryptos, how they delineate between the two. So I'm just making a blanket statement that can't hurt you to do. Be sure to double check what you're putting in when you search for stocks and or cryptos to make sure you're getting the right thing before you hit the buy button. So just
Mhm.
that's just the PSA.
Yeah, yeah. Another one's a good point. Another one is Compound. Its symbol is COMP, but COMP in the stock market is the ticker symbol for the Nasdaq Composite. So yeah, so that's a good point. Definitely be careful. Make sure if you want to buy crypto, you're buying crypto, you're not buying stock, and vice versa.
Yep. So everybody, we will not be on uh, Clubhouse this evening. We are working on the IA Crypto Bulls coming to you very soon. For everybody in the mastermind, you all are a lot of fun. So this has been some interesting conversation, but we're all learning. So learning and sharing, that's the best thing. So everybody, thank you for being with us. If you're interested, you can contact send a direct message to Leon Noble or send a direct message to Brent Simpson. If you're listening to the podcast, feel free to go to IEA Investing Education investingeducation.com and then hit the contact button and let us know what your interest is. And for those of you all, you can also do www.ieanow.com. Same thing. Go to the contact area and just shoot us a message. So thank you for being with us. We talk to you all very soon.